Wake up, goddammit. Welcome to MARKETcast with Monk and Unk. Morning, P. How's your week?
That was really good. Just one of those weeks where just some patience really paid off. I've been on the SaaS, the software as a service stuff for a while, and they were a little bit quiet early in the week, but just had this explosive move on Friday. So it's just having some levels ready and being in some trades really paid off there.
Nice, nice. I mean, coming back from a vacation, I was pretty light except for Square. I clicked that button a few times Monday. But that's not really a trading thing for me. That's something I'm more along in. That's when I say, 5 years and go back to work, that's kind of what that is for me. But it was tradable. It was definitely tradable off the level we provided. So that was great. And then, just your regular, I don't want to call it rotation, but just your regular stuff coming up. The AI names were good. We were a little early on CCL. EVgo. I lucked into EVgo news um, I think it was Wednesday. Pretty sure it was Wednesday. It might have been Thursday, but I woke up damn early because I had a couple holds overnight, and I can't sleep when I'm holding stuff in this market. It just doesn't work
Yeah.
for me. Um, but I seen the news and I got a position, and that thing just never stopped. Um, and I don't think it still has. It ran right to the line I have on the chart. Didn't keep all of it, but um, I had two trades last week that met my daily goal. I think I had like 14 trades if we don't count Square. So I was super, super light throughout the week. Um, really went with the less is more. Did not make goal for the week, but as I always say, half my goal is a pretty good thing. So um, wasn't bad
Um,
for coming back on 9 hours of travel and then 3 hours of work Sunday. Wasn't a bad week, and I think that shows that no matter what your life has, if you just put in the work, uh, you're gonna be okay. You're gonna be set up for success. If you just try to rotate in and and catch what's going on and do like your style normally in the morning, like I just trade this A at A, like you're just gonna get caught in the wash a lot of times.
yeah.
Yeah. So kind of proof of concept again for myself that what we do is worth it. I said, and I don't know if you watched Read the Room, but I said a couple times that's why I keep P around because uh, he knows when the stuff's gonna move. I mean, I know when it's good to buy, but actually knowing when stuff's gonna move, I totally depend on you for that nowadays, has changed my trading career, to be honest with you. So
That's good. Yeah, the EV stuff. It seems like the herd is thinning out a bit in the small caps. Like
yeah,
you kind of see the ones that have more potential, and they're sort of the ones that move from that $2-3 level, getting to five and above, and then you have some that are just really fading. Nikola could definitely go sub $1. I think it's just there's flow I trust and flow I don't. Like FSR and EVgo are usually pretty good reads,
yeah.
but lately like Ride, Workhorse, like all those just there's just not much there. They have to something something in the real world has to happen to get them relevant again. I don't think it's just you know retail traders are gonna like wake them up or something. There's
Hey,
got to
so
be
so
got to be news.
that spaces thing, just so you know that I'm not crazy. I just go in and check on things all the time, see what people are talking about.
Yeah,
And
yeah.
I went in there and they were talking about bags. And then some guy like tried to start talking about how Mullen was great, and
Oh man,
and just their like history of Mullen was so far off, especially from my perspective, because I'm pretty much sure I was top five first ones on that thing when it
yeah.
came out. Um, and then I think I called the death of it as well this time around. But
Yeah.
they had put out news of their deliveries, and like they had a Q1 deadline and they have a 6,000 vehicle order, and they sent four vehicles because they didn't want to get fined or pay the penalty, whatever is in their contract. I didn't get that deep into it, um, but I'm of the mind that those are probably coming back on a recall or something, right? Like something's not going to be great
Yeah.
with those vehicles, and how that pertains to the EV we're talking about is like those guys are just cash burning right now, and that's not gonna last forever, especially when we get into this credit issue, which I think is coming up in the broader sense of the market. Money's going to be hard to find, and if you don't have it on hand, or someone ain't just giving it to you because they're like an angel investor or something like that, them doors are closing real soon on a lot of these cash burners. I don't know how else to call them. And EV is a great example because a lot of EVs just burn cash. That's all they're there for.
Yeah, yeah, completely. In the broader scope of the market, I mean, obviously the move at the end of the week was interesting, and something too as a trader who's been around a little while now, for the the media to talk about, oh, we're in a bull market now,
Yeah.
is just sort of interesting to me, because it's not like I think the market's just going to tank from here or something like that. But it was a really aggressive move to get to this point. And even within the week, that brief touch on QQQ in that 304 area that I always talk about,
Yeah.
I mean, it just shot way the hell up after that.
Hot stove
And
did it bounced off that hot stove.
yeah, yeah, exactly. And then so just like all that momentum, and I don't always like, I rarely trade Apple, but I went ahead and grabbed some Friday because I just thought, the quarter's ending, market looks bullish. In the money, zero TTE was like $60. They went to
Oh, nice,
200.
nice.
And so it's like a lotto. I mean, that's kind of a safer one just because it's Apple. It's not going to just collapse if the market has momentum because Apple's kind of the one pushing it. But anyway, so it's just sort of interesting that a lot of times by the time a story makes it to the public, it's a lot of the moves happened,
Yes.
and I think that's why a lot of people get bagged when they're just kind of checking the news. It's hard to get a good entry, and then and even if it's a stock that's on an uptrend, your entry is going to be bad, and so then it's like you're going to hold that while it dips. If you have a plan, and a lot of people don't, and if you're in options, that magnifies the problem times 10 because the entry's everything with that. So it just sort of shows the benefit of actually getting into this stuff early, seeing what's going on, willingness to buy red, trading in a plan where there's going to be some dips and you grab things. That was like our Twillo trade. All that to me really stood out as kind of the public, sentiment towards the market shifts, like I think it has here.
Yeah, you know me, I'm not the biggest micro macro. I can't even spell that stuff. Um, but
Yeah,
I do follow trends real well, and I try to always have a, a vision of what's going on. And I'm at the end of my goddamn August to April's going to be the bottom. I can't tell you when, but all things get up at different times. Um, that definitely was accurate. What I'm seeing right now, because I gotta have it. I mean, whether I'm right or wrong, I gotta have an outlook. Um, it was the first of the year we call. I mean, if you look at any chart, we talked about it starting in February, pretty much, or towards the end of January. Like every chart came up off the bottom first of the year. Um, then we kind of had that 6 weeks sideways or down, kind of turned to seven with the Fed event. Um, and then we kind of leveled off two straight sideways until this last week. But for me, hindsight's always 2020, and I look for patterns to repeat themselves. And everyone's not a day trader. Um, most big funds aren't day traders. So for me, it looks like the quarters. People are just buying on the beginning of the quarters, and I think we're about to see that and have a little bit of I don't want to call it a bull run because for me, we're still inside the box on a lot of things, but we're going to test
yeah,
the upper side of that box and not the lower side of that box um, in anticipation for a bigger catalyst. And if there's anything like we don't know right now, I think just on money, the stuff with which you talked about, which I started looking into because I thought it was, I'm a contractor. When you said bricks, I was thinking, why are we talking building materials? But their rotation out of the dollar into the yen are making their own currencies on the table. So I really think we're going to get pressed to find a solution in Ukraine here really soon, just to avoid that. If not, the backside of that is recession, in my opinion. But I don't think we start there. I'm totally looking for the Feds and all these numbers that have been came out that have just been drastic moves over the last year to basically stop affecting the market so much. And I think we kind of seen that with this last rate increase. Like the market really didn't do anything too crazy. Um, like I had before, where you get this big sell off and then this big buyback, or a big run out of it. I think we're under control again in the market. And again, Q2, you're just going to have a lot of buying in the first 2 or 3 weeks of Q2.
Yeah, and you have a lot of charts with room, and one of the things I look at, I mean, for the Qs, the August high is within reach. I talked about that on Friday. So basically, that gets us in like the mid 330s, and it's 320 right now. So it makes sense to test that. And tech is really imbalanced right now because of how well Apple, Microsoft, and some of the big names have done, and so others lag behind. So that means that those mega caps are taking up a bigger percentage of these funds. So that has to resolve itself some way. And it's not necessarily just that they're all going to sell off. You could have some of these play catch up, and Apple can go flat for weeks, and I
Sure.
mean, while the market's going up, and that's one of the reasons I don't day trade Apple every day. But that's kind of a scenario too. Caught a nice move on those SaaS stocks, and that's kind of an area that I see that those can take some big legs up. Those 10-point large caps I talk about, and so that's one of my focal areas too. And then lastly, I think you get some sector rotation
Hmm.
where there's a lot of consumer cyclical that has some room to recover. Where I see some positive developments as well. So I'll definitely be looking at that.
Yeah, and it's that summer stock time too. Definitely though. That's why I hang out with you. Them sectors are clean. I
Yeah,
mean, you put me in that. I always tell people we offer a safe pools to trade in. Um,
yeah,
bro, you offer me safe pools to research in and to find plays in. Like I did, you just got to say gold or EV, and
yeah,
that's all I need. Like
yeah.
it's I mean it's I just trust the indicator, I guess, for lack of better terms. I don't really look at QQQ often. I'm a SQQ guy, and I really don't look at that chart. I just play the price and the general um, market sentiment. But man, this
Yeah.
QQQ makes my August to April thing look like I'm a genius. It really
Yeah.
does. um, I know a 304 has been in my head for a while because that's the number you kind of pound the table on as a big pivot, and we definitely picked up off of there. 305 is actually your 20-day volume profile average, which shows how accurate you are. Um, you just know some of these very well, but I know that's because it's kind of what you learned on where you started trading.
Yeah.
Used to be a big indicator for you. I remember when we first started, you got to look at them every day. You got to look at them every day, and I definitely added a few, but that one never. I'm not. Those shares were just too much to trade my style.
Right.
Netflix, all that stuff. Like it just doesn't fit my general setup as a trade. But man, knowledge is power, and you sure have that one locked down. Let me tell you.
Yeah. No, it's been good, and so obviously too. Well, actually, do you want to get Spy first, or want to talk about
No,
like
let's.
oil and all
No, I
that?
got it. I got Spy already circled. Do want to get into that. So let's get into that. You definitely won the
Yeah.
week last week. Yeah, we were really. The thing about it that not bothers me, but kind of gives. I was right with you, and the way you're not only the numbers, but the way you explained it, definitely had this setup possible. So yeah, I circled that probably halfway through that Friday run when I was going over my notes. Like, yeah, we're just gonna tell Professor he nailed this one this week.
Yeah.
Let's not even debate that. Um, so yeah, start there. Friday's kind of the elephant in the room, right? Like do we have a flat week? Do we pull back, or people keep buying? And by my thesis that I just said 2 seconds ago, if I stick with that, I definitely see more upside. At least maybe to the last high on the weekly, um, and maybe more, to be honest with you. What is that? But yeah, I mean, I definitely see like yeah that 415, 416 level. I think comes into play this week if we do continue this
Yes,
trend.
yeah. There's definitely enough momentum left over uh, from Friday, and I look at things like Tesla, 250C. What is going on with people buying that? Is that just retail chasing or whatever? But you start to look into the orders, and those are some pretty big funds stepping into that. Doesn't mean the contract you want to necessarily trade, but the point is that the momentum is there. Sustained selling has been very hard to come by, and the way that Google and Amazon have held up, I think says a lot. And just the fact, I think that um, the way that the buying steps in so aggressively to any dips is something that I look at as well. So yeah, I'm with you on that. And
I got
as
numbers.
I look at it,
I got numbers for you just to get out the
yeah,
way. When I get my ass kicked, I go back. Sorry about the language, but I go back to my what
yeah,
I'm good at, and that's TA 416 402. That's what I got this week. I am not trying to do nothing
nice,
special on that chart. I'm just gonna go with my TA. So that's kind of what I see.
yeah.
Anything else to the top is a bull market, in my opinion. We're flipping back for sure, and then I'll totally be honed into the thesis I just gave that people are going to buy for the next 2, 3, 4 weeks, like January.
I'm going a little beyond that. I'm going 420,
Oh
um,
man,
just based on what I'm seeing, and but I think that will be. I think it'll get rejected there and make kind of pretty quickly, and then sort of make a decision. And then as far as the downside goes, I'm going to say like 402. What
yeah,
I
we
got for the downside.
all right. So we got a $4 difference. We hit the same bottom. Um,
Yeah.
I'm probably if I win, it's because we don't have a Friday market. It was
Yeah.
good
Yeah. I think
Friday,
that would be
but yeah,
that's a good point too.
I
Yeah.
like it. And I didn't want to say it. I got to get my dub here. I can't give you any help.
Yeah. Yeah. No. Yeah. I'm with you. That could definitely hinder it into Monday. I mean, this is sort of the 420 thing. It's kind of a 2 week setup, but I think we might test it and then go back to it. So um,
You're gonna
not
in the
not saying
long run, you're a swing trader. I already see it. I already see it.
yeah.
You're gonna be a big thesis. You're gonna have your thesis worked out, and you're just gonna be like, I'm adding this until it happens, and you're gonna have 4 or 5 money,
Yeah.
and that's where you're gonna kill it, in my opinion.
Well, I think I mean there's a couple trades that have led me to that sort of thing. I mean, one is Baba, where like I just park a decent chunk of money in there for summer calls and some shares, and then you just wait.
Mm-hmm.
And then we saw what it can do. Snow's another one where this is twice now. I've taken these leaps from like 600-800 bucks to go over 2,000. Just like okay, this kind of works. This is a little easier than trying to snipe weeklies on this thing. So yeah, that's
Yeah.
definitely where I'm going.
I mean, to not be critical or critique you at all, but um, I think you should share how you determine position size. And I know it's just you don't fucking take chances on things. But like
Yeah,
you trade from like I know I'm not I see it. You trade from like 60 to $1,000 or 50 to $1,000 if you want some round numbers. That's your like trade size. It's a pretty big window. But you know which
yeah.
trades to put the $50 in, and you know which trades to put the $800 in or $600 in. And yeah. So I think some people see the 300-400 percenters that you do, but
Uh-huh.
you're putting sandwich money in there
Oh
because
yeah,
you're
yeah,
smart
yeah,
about it. You understand that aspect of it way better than most people. Where most people are like, I'm just buying five. They don't care about the price, the idea, or the thesis behind it. Um, yeah. So
so yeah, there's two completely separate pools for me, and I don't even the leaps, the share leap. combo things. Like I actually don't even look at that as part of my daily goal, really, because the day doesn't matter. And like the Twillo was a perfect example of that. What Twillo did for 3 days doesn't mean anything. And then it goes up 40% in one day, and I knew that that was going to happen. Well, I didn't know, but I was pretty confident that would happen with Twillo because that's kind of what it does. I'm like, it's going to break out of this zone. Once it does that, that's when the trade hits. My daily trades like that, the smaller stuff, my daily goal is I want to make between 400 and $1,000, and I want to use as little money as possible to do that. And so that's kind of my whole approach to it, and that's why I play those weeklies, just because I have really strong levels and flow reads, all that stuff. So that yeah, that's what I try to do. I try to take a $300 position and turn it into 550 in 20 minutes or something like that. But you can't, I can't size up on
Yeah.
that, because my whole psychology would change. I said this with Apple on Friday. I'm like, look, a day like today, I'll take up $120, and I'm going to try to turn it into 300, or it's going to fall to 60. I don't care if I was doing 1,000 and trying to do that. I wouldn't like that. I wouldn't like turning 1,000 into $500.
Yeah.
That's just I didn't grow up with a lot of money,
Yep.
so it matters a lot to me. So yeah, I just like I think you want to protect yourself and know when to take on risk. I'm fine with lottos. Lotto's 10% of your account. That's not good. I don't think that's something to do. But yeah, that's sort of my approach there. The sizing. My biggest positions are in oil and basic materials, just because my the reads on a sustained move on those for the past year, have been stronger. Tech, I think, can get to that point coming up here soon. And I'm a few like Snow. I've done that, Twillo, but they're just more volatile. They're prone to pullbacks. Levels break down more. But yeah, typical sizing for like an X swing or something like that, is about $1,400 for me. And so when you see me in monthlies, I'm in that, and about 400 of it is options, and then $1,000 in shares, like $1,000 in shares, just because it's a nice round number, and you know
It's crazy how
easy to track
different
as it
how
goes up.
different we are in that regard. Because I mean, I'll, my line, let me know when I switch up, right?
Yeah, yeah,
I tried with the same amount. We talked a little bit about it in DMs. Like, I think we hit the same number, real close to the same number, and you're like, yeah, I spent $800, and I'm like, I put almost 20K through this to get this. Um, but I look at everything straight from the risk level, right? Like it has to meet my risk assessment. It's not about the money. Sometimes
yeah,
you have to, I guess it's not about the share price. Um, I just have a setup on how to trade what share price it is, and and for me, it always goes back to 3-to-1 ratio. That's all I'm looking for. Outside of like some social scalps or stuff like that, I'm just trying to ride a wave for dimes and nickels. But for me, it's all about like I am a protect my neck guy. I do not like hanging it out there. As soon as I get that SL in green, I do it. As soon as I have, you know, I'm set. My goal. It's $1,000 a day, right? And as soon
yeah,
as I have a quarter or half of that, I'm taking it. I just want to build base hits, and I think I said it in chat. I'd rather just be 8 for 10 on base hits than 5 or 10 with 2 home runs and 3 base hits. It just fits. It fits what I do better. It's that brick by brick mentality. Um, and I'm also okay with half my goal. It's not a bad day. Um, it really isn't. Whether my goal, if you stretch it out over the month, them 20 trading days, it's a lot of money. Half of that is still a lot of money, and that that's I'm here kind of to sustain through time, right? Especially in this market, I just want to survive this market. But it's the whole point of that is that our approach they're very different, but they're both very effective, and offering that to people, because there are some people that have some size. that
Yeah.
do like to trade that way. Um, so yeah, I just think it's unique that not only do we come together on plays, but that the styles will work on those plays as well. So just
And yeah, and I think like for the weekly options, my whole thing is like I want to make this position free as quickly as I can.
yeah,
And
yeah,
what that means is I had that like coin puts like last week or 2 weeks ago, and I had I think 5 or 6 of them, and I sold. You know, they went up to like 30% and 60% like really fast, and then I just kept one. Well, that one overnight went 1,200%. And I mean, I could sit here and do the math if I had that full position, but it's coin. I mean, it could just gap up overnight. So you don't do that. You don't worry about that. You don't do anything because that greed will just mess with your head. So I think don't buy one weekly looking for the home run. You'll burn it up more often than not. I think you want to get in a high probability setup, have made 2 or 3 or whatever, cut some of them, put the stop loss at entry if you're looking for the big move. And if it hits the entry, who cares? If it goes up, great. Then you just do the next one. So
you
yeah, that's part of it too.
you kind of brought it to my attention a while ago, but I refined it a little bit. The state of Twitter right now, I don't want to get too much into it. A lot of those guys, lucked out in some trades in a really good market, and they do have some account size. Um, but they're swinging for the fences, and they might show 11, 12, $15,000 trade they made. But trust me, there's probably 4 or 5, $3 or $4,000 losses behind that they're not showing, and you called that out. Um, a while ago that they lose four and win one and only show the one win, and you there's
Well,
just
they so like it's sort of like if you're doing like forensics or something. When like I see the sizing that they do, and I can find the complementary put trade that they bought at the same time. And so what they're doing is they're breaking even, winning a little, maybe losing a little, but they're just using the big win to get subscriptions,
yeah,
and
yeah,
that's the whole that's the whole game plan. And that those guys they aren't even so much pumping because they don't actually really want to alert something because a lot of times it's their win rate's not that good.
yep,
So they just do it like they'll post these watch lists with these unreachable triggers, and then they'll say, "Oh yeah, this pulled back, so I went ahead and jumped in, and here hope y'all banked," or like, but no, there's no actual guidance on that trade they really made. So that's one side of it. The other side is there's fewer of these guys, but they're really egregious. They'll front load out of the money contracts at $25, alert it at 32 or 33,
mm-hmm,
sell into all their followers. Most people get bagged. They have the comments off, and they just go on to the next one. And a lot of times when they say they're losing, they didn't actually lose.
yeah,
They just don't want to say that they bought it at $20. And
no,
and if they own, I mean, this is like where the penny stock comparison comes in. They
yes,
own
the
two-thirds or
of the floor,
three-fourths
yep,
of the actual
yes,
contracts.
yes.
So that they have a lot of power over that particular contract, regardless of what the underlying price is doing.
I forgot what stock it was that our boy did at Wednesday or Thursday, but that he like at the market close, like 1 minute posted, "I'm scaling out," and
Yeah,
you just know you just knew you just I don't know how you don't see that, but just such CYA. But also, like you're saying, it was profitable CYA, and then that came back down to whatever it was. It was a $10 stock too. I can't think of what it was, but it came right back down to
rum. Yeah,
yeah, rum. It came right back down in to out of the money, and that thing never was profitable from the entry price that was posted. Um, yeah, no. And another one I found this week, I don't want to say names, but I went pretty hard on them. You can go find the tweets, but they're asking $2 for their podcast, and it's like you
yeah.
just want to monetize your brand. You don't really want to do anything with trading. And they kind of fired back at a conversation with me and talked about, if I had 30 or 50K, I'd start a shoe company. And I just went and added up their PL on what they posted and screenshots on their PL for the month,
Yeah.
and it was like 50K. So I mean, either you're gambling or you're lying, um, or you're really bad with money. But if you have screenshots of 50K, you don't have 30 grand to throw around, something is off in Brooklyn. I'm just gonna tell you that right now. And
Yeah. Yeah.
there is rats in that city because that just doesn't seem right to me. When I have a big win like that, and it's been a while, but that my account doesn't go back under that number ever again. It just keeps building. So to see PLs like $11,000 trade, $5,000 trade over and over again, but you don't have 30 racks. Come on now. I mean, and you're giving advice. You have a podcast. You have services. Just come on. I mean, I don't know how people don't see through that, but it really irritates me for anyone out there with 5 or 10K that is trying to do this the right way, and has just led to a casino.
Yeah, and what happens is that a lot of times the newer people will lose on trades like that, and they'll think, I screwed this up. I did something wrong. I didn't follow
Mm-hmm.
this alert correctly. Um, and those guys are really manipulative about that. Just sort of like risk management, bro. When it's a trade that moves the options move 30% in 20 seconds, and you're telling someone to do risk management.
Yep.
The risk management is not to buy that thing to begin to begin with.
Yeah. No, I
But
got I got I got burned when I first got to Twitter. It happened a few times. I mean, it
yeah,
it,
oh
it
yeah,
did
me
because
too, me too.
I followed it like that, and I mean I just told myself even before the other room, before I was even in that other room, I just told myself, if I'm just not going to post PL for likes. I'm not going to do
Yeah,
it. I mean, I didn't even post when we were in the other room. I didn't even post my levels, right? Like I just try to get people to
mhm.
find their own level. Um, because of that, I mean, you don't want to. I don't want to lead people astray. It doesn't benefit me. But it's just. I don't know. I feel bad when people lose money, and I think we can all win. There's just no reason we can't all win. We're against the market, not each other. And
Yeah, yeah.
like let's say 80% are out for self gratification, self gain, and and that's just kind of what it is. But I mean, that's the world. So I'm glad I found you, because I do think you agree with that we can all win, the right way.
Yeah, absolutely. And I think that finding, like, I don't like to talk about what I'm currently in sometimes, because it's like you should, like, I would not buy what I'm in right now, because it all I'm like,
Yeah.
I'm looking to get out, and I don't want to get out while you're getting in. So that's part of it. The last thing I noticed about the whole Twitter space is they're so good at marketing that they market losing pretty well. Like
Yeah.
they'll,
Yeah.
I'm man, oh man, he's transparent. And it's like a guy will have three $500 days and then lose $6,000,
I've
and
seen
it's
that.
like,
Yeah.
I'm on the journey. We're on the journey. We're all going to learn from this. And it's like I look at that. I don't know if it's a generational thing or what, but I'm like, I I won't follow that guy. Like, I might just like watch what he's doing just to see. Those numbers are just astronomical. But there's something very wrong when your losing day is 10 times the amount of your typical winning day. You
If
don't have this down,
if
and you
you're
should not be teaching anybody anything.
No, and if you're following, my thing with that is if you're following me and I'm a better trader than you, right? That's why you're following me.
Yeah,
That's just keep it basic. And like you can't match my good days, right? Like if I'm green, you're green. That's not
yeah,
always going to happen. So if every time I'm red, you're red also, I'm basically deteriorating your account quicker than mine. Like that just has always made no sense. So that's kind of where the no alerts come from. Is like you can have a green day when I have a red day, and if you have your own system, I mean it shouldn't be it's green for the room or red for the room, because it's not going to. The people that are following, and I hate the word following because I think you should be a leader. The people that are following, they're going to have misses, and off of less than mine. It almost becomes a pyramid scheme to me in that regard. They're not going to do as good as
yeah,
me. You can't beat me. You're following me, but you can definitely do worse than me. And I've never wanted to put people in that situation or the pressure on myself. Um, and I want to golf on Fridays, but and you should still be
yeah,
able to should still be able to trade without me. So those kind of things have always been why I do it the way I do it.
yeah,
And I think you're the same kind of the same way, like because you've had the the Twitter experience, for lack of better terms. Um,
Yeah, absolutely. And I used to um alert in the old room, and I had a really good win rate and everything, but it was hard. It was hard on me. It was hard for newer people who didn't understand options to know that, you know, $50 to $70 on an option is good. And even if you bought one and it's $20, you need to go ahead and take that money,
mhm.
because it's gonna, it could fall back down to 40 or something. So like I didn't like that. I liked the setups. I like for people to get into it and learn. And when I talk about strikes and options, I want to talk about, why you buy close to the money on this one, and why, looking at a monthly, what tells me that I'm looking at a monthly here? Why am I looking at a leap on this one? That's the kind of teaching that I like, not me like, okay, press the button right now. Let's do it. That I don't think you would learn a lot doing
Oh,
that. And
that's
it's
why
hard to manage.
Read the Room is the way it is. I'll get that out there right now for anyone listening. That's why I mean I'm stubborn with it, but I want whys to come out of Read the Room. I want you to
Yeah,
ask me why, so we can talk about why. That's you putting the work in, not just me telling you, hey, it's here. I want you to say, hey, why do you think that? And we're far from that, but that's I mean that's my dream in the long run is
yeah,
just having those conversations with people about the whys. I see things, I see it, and that's why I'm going to continue to stay stubborn. Did add a little edu over there this week, and the same with this session. Like I like now that we're kind of more, talking about the psychological aspect and actually how to move that covers most plays instead of individual plays. I think we started out here with let's not mention stocks, but that idea has morphed into talk about overall conditions a little better.
yeah. Well, I think, yeah, sometimes like a stock illustrates a concept, and
Yes,
that's
yeah.
sort of what we're after. Um,
We're drifting away from we're getting towards the end here, but we're drifting away
yeah, yeah,
from the hard stuff. So I'm gonna go first. I'll each take 2 minutes and kind of touch on our topics. Um,
yeah.
Space plays, not to mention anyone in particular, but Richard Branson's going out of business. Not that I mean, I do like that sector short term, but in general, when companies go out of business, um, it's always perceived that other companies are going to take their market share. So when a bigger company goes out of business, it affects a lot of the little guys. When a little guy goes out of business, it usually affects the big guys. I think we're going to see that in space with Richard Bronson crapping the bed on a couple of them. I don't know if space will do the same thing, but um, the other one should be fine because someone has to launch satellites in the air or give people a place to invest in space, and that's just it's the general market mechanics in my opinion. And then we had the Feds and PMI this week, but as I stated earlier, I really see those things not really affecting the market as dramatically as they have in the past year, which is good for the market. That they're not sitting there like a scared little cat or child waiting to get hit. Um, where market's going to do what it wants. The Fed events might do do something to a certain sector or maybe something like that, but we're not going to get complete dumps across the board or complete runs across the board from you know someone doing something hawkish or dovish anymore. And again, I think that's healthy. So I'm looking for that this week to continue because it kind of happened, like I said, with the rate increase a few weeks ago. The bigger news just really ain't pumping or dumping the market anymore. Yeah, that's what I got over there.
Yeah, no, that's great. And just a quick note on the space plays. Like, one thing I look at too is how underwater are some of the funds on these, and like
Yeah.
Rocket Lab. Um, there's a lot of people with an average over $7 in
Yep.
that $8 to $10 range. So I mean, that's 100% from here. Not that we're going to get that, but that was one that stood out to me as potentially positive. All right, so yeah, so for me, oil is I was looking for oil to get back into this little zone it's been in for a while, of this like low 70s to 80 $82. And we're there. It broke 75. I think that a move to 80 is really probable here. And then the question is, do we stay in this zone, or do we break out? I don't think we go back to like $120 oil or anything like that. But I think mid 90s in the summer is possible. So that's kind of a larger thing I'm looking at. So oil, I think the a lot of those charts are in a really good spot. And what I'm looking for and what I'm studying is what are the plans for the summer for some of these. Oxy, Exxon, we kind of know that what the top end is there. They could certainly challenge all time highs, but really to me, it's the plays like Dino and Devon and MRO and APA and these ones that took the kind of the brunt of the drawdown have the most room to recover. So there's going to be a lot of opportunities there. And then with gold, this 2000 level is a pretty big deal. And for this uptrend in gold to continue, it's going to need to break through that. But at the same time, one thing I'm watching is if 2000 keeps rejecting and we just kind of stay up here for a while, how are those stocks going to react? And the charts are not all the same with gold. There's quite a
Yeah.
few that are lagging behind, and there's some opportunities for them to play catch up a bit, even if gold prices themselves stay sort of flat. So that's something that I'm looking at, and it's just where the actual study of the sector pays off. That they're not all the same. You don't just toss money at a gold stock when gold's hot and think you're going to do well. You gotta be sort of strategic about it. So be looking for that in my notes as well over the next couple weeks. And then silver too. Had a really good question about silver, about like, okay, so if silver's behind gold, what does that mean about what price would silver be to kind of match up to it? And I think I said that kind of like that 25 to
Yeah.
$28 range or something like that. And so we're sitting at 24, and I'm looking for silver to continue to try to catch up to that bit as well.
Yeah, I was a little disappointed that I didn't know the silver price off the top of my head. You can give me incomplete on that one because the rest of them I got down. I don't know if you haven't said it enough, but
Yeah,
I had to ask you in voice or in main chat like, hey, what's the answer? Because that was one I didn't know, but I got it wrote down now. The only thing I got to add on yours is, me, I try to play off of you. Them oil shippers, I really think are promising, and then obviously the miners. Um, I like all of those still, and we have a
yeah,
plethora of those um, that we've been on. So good stuff, good stuff. I'm ready to go to work if you're ready to go to work.
yeah. Let's do it.
All right, let's move over to the DD session then.